Good evening, everybody, and welcome to Never Mind the Buy Box, whatever episode we are. I can't remember. I've stopped counting now. But essentially, this evening, I am joined by Amazon Accountancy extraordinaire, Mark Horley. Good evening, Mark.
Oh, good evening, Natalie.
How are you?
I'm good, thank you. Thanks for having me.
Oh, good. Well, thank you so much for joining us. I know that I think you did one of these. Was it last year? I'm a bit confused. I think with the amount. Was it last year? This year's just gone by in a blur, obviously.
This year doesn't really exist in months, does it? So I think it was probably that.
Yeah, it's like this year just doesn't count, does it? In terms of in anything that's kind of going on. I was speaking to a doctor earlier, and even she agreed with me that this 2020 doesn't exist. So first off the bat, then, does that mean that we all don't have to submit our tax returns for 2020?
No, that'll never change. You might get delayed a bit, and they might give you a bit more grace, but you've still got to submit.
Damn. Well, you don't ask, you don't get, essentially. So I always think it's definitely worth asking. So just waiting for a few people to jump on and join us. So it's going to be slightly different tonight, guys, because Mark is obviously an expert in Amazon Accountancy. We want to take the opportunity to maximize his time that he's very generously dedicated to us this evening. So you'll be good to hear. I'm not going to waffle on tonight. It's going to be more of a Q&A setting where we've got some pre-asked questions. We're going to be asking questions, answering questions live tonight as well. So it's just going to have a very casual kind of Q&A feel to it. So yeah, it's going to be slightly different from that tonight. But lots of you have jumped on already, so I'm just going to say a quick hello. I'm going to run through it really quickly. Karen, Jed, Gurav, Jordan, Jane, Neil, Harminder, Kate, Matt, Janet, Mike, Anita, Cindy, Julia, Sean Paul Gilbert, always a character, obviously Bob, Nikkei, Paul, Bindi, Paul. Yeah, keep going. Right, now, before we get started, before we dive in, I'm going to ask Mark to introduce himself. But before we do that, we kind of did it last week, and it was a little bit of fun, and it also pushes out the notifications. So there is method to my madness as well, just to let everyone know that we've gone live. For all your comments and everything. So if you can say hi in the comments, please do. But last week I kind of asked the question about the American election. Who did they think was going to win? And you guys were wrong because you all said Trump. But anyway, moving on very briefly from that. That was a bit a bit controversial. What I want to do is ask a question before we get started, because it's related to Mark and what we're going to be talking about tonight. Is I'm interested to see how many of you guys, and if you feel comfortable, only if you feel comfortable answering this, the guys that are VAT registered versus non-VAT registered guys. So or sellers, not guys. Just put it in the comments if you wouldn't mind. Just put it in the comments whether or not you're a VAT registered or non-VAT registered seller. It'd be interesting to see the kind of mix between sellers and at what point they are in their business. I think someone said, are you guys struggling with sound as well? Oh, no. Someone's put VAT registered, so obviously they can hear us. Can you see the comments all right, Mark?
I can, yeah. I didn't realise I had to swap boxes, but I've done that now, so I can see it.
Sorry, I should have done that. So, okay. Lots of people commenting. So, what would I'd say mainly non-VAT registered by the looks of it. So, which is let's have a quick look. Non-VAT. VAT registered.
After the next Q4, that might change.
That's exactly what I was going to say. I think after the next Q4 is generally, you must see this anyway, Mark, as well. Your inquiries must spike after Q4 for the people that go from non-VAT registered to VAT registered.
Definitely, yeah, and just before as well. So during the summer, it kind of spikes as well.
Yeah. Oh, okay. Cool. Well, thank you everyone for participating in that. That's good. And I think most people have kind of jumped on now. So before we jump into the introduction and the questions, I'm just going to set a few, not ground rules for tonight. It makes me sound like a headmistress. But there's going to be a lot of, we're going to go through all the questions that was pre-asked first to Mark. And then what I'm going to do is I'm going to answer live questions. So guys, what I probably wouldn't start asking your questions yet live, purely because they will get lost by the time people are commenting. But also, if you could help me out when you're making your comments, if you want to ask a question, could you put the word question in caps in your comment with a little dash and then the question, so I know it's a question as opposed to a general comment, because I really want to maximize Mark's time tonight. So therefore, I'm not probably going to read out as many general comments as I would normally if I feel that it's not kind of relevant to the question or the conversation, if that makes sense. Give me a thumbs up or give me a like if that makes sense. Adoronco says I'm the elite headmistress. Yeah, I am. I'm quite strict in there. I am quite strict in there. Definitely. So we will excuse me, get started. So I've got the questions up here, but just while I'm getting them up, Mark, if you would, for those who don't know you, if you wouldn't mind kind of just introducing yourself and let everyone know watching what you do, who you are, where you're at in life, you know, that kind of thing. That would be great.
Okay, so as you can tell from the screen, my name is Mark Horley. I run a company called Passive Tax. We are specialist Amazon tax and VAT accountants. 95% of our clients are Amazon sellers. The other 5 is made up of eBay, Shopify, e-commerce, etc. We are specialists in Amazon. There's no other way of explaining that. We niche in Amazon. We've spent a lot of time understanding the information that Amazon give you and how that's interpreted in law and in tax. And obviously we apply it efficiently and legally. So yeah, I mean, there's not really much to introduce other than we're Passive Tax and we're Amazon specialist VAT and tax accountants.
How long have you been concentrating on Amazon sellers? How long has that been your specialism?
So we've probably been concentrating on Amazon sellers for about 3 years in total. We came up with the idea probably about 5 years ago. We had a standard bricks and mortar accountancy company, and one day we was looking at how we're going to take on more clients and find clients. We realised it was becoming increasingly difficult, so we said to ourselves, we need to niche and specialise, because that's what's happening in the world with every sector in industry. People are, instead of being general, they're niching and going for a target audience. So we decided that we had to do the same. We looked down the property route and we looked down the e-commerce route. And as we was looking down the e-commerce route, we came across the Secret Wealth Project. So I joined, and then I noticed that I think they had an accountant in there at the time, but he was never really giving knowledge back. So I came up with the idea that every time somebody asks a question, I'd just answer it. And that's what we did. And obviously, over time, obviously we've become more prominent within the Facebook groups as being Amazon accountants, and obviously we're learning more as we go along. So I mean, yeah, that's basically where we started from and where we are today. We've got 16 staff, work from an office in Nottingham. Most of the staff are home working at the minute.
Yeah, of course,
because of the current situation. And yeah, that's where we are.
Wow. Do you know what was really interesting about that? And I didn't know that actually, Mark, that it was Secret Wealth Project that sent you down this direction.
Exactly.
Matt's kept that one quiet. Normally he tells everyone, but
it happened. Yeah. I looked down the property route, and then I looked down the e-commerce route, and I'm not sure how I came across Secret Wealth Project. I've always tried to look back and find out how and what led it to me, etc. But I found it, joined it, and then here we are. Some like 4 or 5 years later. Yeah.
I find that amazing. I'm not gonna keep going on about it, but yeah, I just think that's amazing that, you know, I always really do like to give Matt and Karen their shout outs and everything like that, and credit where credit's due, because Matt has, and Karen as well, have changed a lot of people's direction in their business and lives and things like that. And I like to give the credit because I don't think they get as much credit as they deserve. So, you know, that's why I like to pick up.
100% it was down to Secret Wealth why we're here today, employing 16 people, doing what we're doing, and obviously assisting Amazon sellers all across the world.
Oh wow! So not just UK based sellers as well.
We have US based sellers that sell in the UK. We have people based in Europe that sell in the UK and sell across Europe. So yeah, we've got a global client base.
Wow. Okay. Well, I'm sure we're going to pick up some European questions at some point during this evening. But
you always would.
Yeah, absolutely. I think with everything that's going on, definitely that was going to be quite prominent tonight. So let's look at some of the questions. I mean, I'm just going to read them out as they are. So obviously, there is a certain amount, I'd imagine that's kind of privileged information and things like that. So Mark will answer the best he can in this kind of environment. And obviously, some of the questions might be very dependent on individual circumstances. So, we'll try. I'm sure Mark will try and do his best to answer them, as much as he can within this realm of possibility, of course.
And I'd just like to add that everything I tell you tonight has to be taken by yourselves as educational information only. I can only give specific advice to my clients that we have letters of engagement for. So if it's a general question from obviously the general audience, please take it only as education information and do your own due diligence to make sure that those facts that I'm telling you are correct.
Perfect. I think everybody is aware of that, so that is good. Right. Nick just gave StreamYard permission on Facebook. Yeah, brilliant. If you could try and do that, that would be awesome. But StreamYard really does have a mind of its own. I know people that give the permission and then then they don't show their names, and some of you on YouTube. So we'll try our best. We're trying best to work out who you are. But if it says Facebook user, sorry, there's nothing else I can do. Right. Okay. So let's jump on. First question from the pre-asked questions was from Paul Morris. And again, I don't know if this is a question that you can answer, but he made sure he repeated that he wanted me to ask it. So here we go. What's the best way to get a Tesla through his company?
His company could buy a Tesla. I mean, at the minute with the 2021 tax year, a Tesla is 0% on benefit in kind. So as an employee, you would not pay any personal tax if your company gave you a Tesla.
Right. And is that, I take it that's because it's zero emissions?
Yeah, it's just one of them cars that falls into a certain category that's being beneficial and being put forward by the government as an incentive.
Oh, okay. So if you had loads of dividends or loads of extra, you wouldn't, if you pulled it out and bought a Tesla, you wouldn't get taxed on it.
The company's going to obviously have to be able to afford the Tesla.
Yeah, of course.
The employee would not have any benefit in kind taxes due on his own self-assessment.
Right. Okay. That's good. And if it was, does that work in the same way if you were financing it or buying it outright?
Yeah, there'd be no difference on whether it be financed or brought outright, because at the end of the day, the ownership of the car doesn't matter. It's who's using the car.
Okay. So definitely worth, if you're considering putting a vehicle through that purposes, something like a Tesla would actually be a really good idea.
Something that falls into the brackets where you're not paying. Normally, it's about 31%. So, and that's 31% of the value of the car, and you're taxed on that. So, effectively, if it's a £50,000 car, effectively you could have 31% of that could be taxable, and then you're taxed at your rate on that. So, if you've already got income and it pushes you into a 40%, then obviously you're paying more tax on that.
Cool.
But Tesla and low emissions vehicles at the minute for the 2021 tax year have a 0% benefit in kind.
Right. Okay. Well, that's good to know, and good excuse, obviously, to splash out on a new car if your company can afford it. Obviously, contact Mark before making any of those type of purchases.
And one thing to add to that, that's for this year. Obviously, if it's a 3-year deal and you've got it next year and the government changed the policy, then you might have to pay tax on it personally. So you need to weigh up the policy isn't going to change, or if it does change, you can still afford that personally.
Right. Oh, okay. Great advice. Thanks, Mark. Matt says, is a van the same? He's put a van with.
Vans are different. The benefit on kinds, and the van's normally a lump sum rather than a percentage on the cost of the vehicle. It's always more beneficial to have a company van than a company car.
Right. Okay. So van's the best option, even against the Tesla.
The best option is to buy it yourself and then charge mileage to the company at 45 pence per mile. That
Right.
is
Okay.
the best option.
Right. Okay. So that's an even added extra gold nugget. So not just do it through your company, buy it yourself and claim mileage. Perfect. Perfect answer. Thanks for that. Anita's asked, hopefully that answers your question, Paul. Let us know if it doesn't, but everything was in that answer, so I'm sure it does. Anita's asked, does the VAT on Amazon fees need to be repaid in your VAT return if you're on the flat rate scheme?
If you're VAT registered, no matter what scheme you're on, your Amazon fees become reverse charged. So what happens is it gets a special code in within your bookkeeping, which means that Amazon have withheld the VAT and they pay the VAT direct to HMRC. But because that's happened, you have to tell HMRC to expect it. So it's added to your sales and it's added to your purchases, so it's at no cost to you within your VAT return. So even if you're on the flat rate scheme, you declare it in your sales and your purchases, but it doesn't alter the VAT you have to pay.
Right, okay. But the important element there is you need to declare it.
It should be, if you're using bookkeeping software, it should declare it automatically if you've coded it correctly. If you're not and you're using some kind of software, spreadsheet software, etc., yes, you need to declare the fees VAT.
Okay.
You don't declare it and pay it, you declare it on both sides of your VAT, so your input and your output VAT.
Okay, lovely. I know Anita's watching right now, so again, hopefully that answered your question. If we don't feel that there's any more to add, we'll kind of move on, but let us know in the comments if you need it expanded on further. Antonio's asked, this is a really good question, and I know that this catches a lot of people out actually, so it'd be good to get some actual clarification on this. So VAT receipts, I'm under the impression that receipts under £250 are exempt from requiring VAT details. Is this correct? Many OA email receipts are void of all the details, including the retailer's VAT number. So are these still okay for an accountant?
No. So
Right.
anything under £250 falls under what's classed as a simplified receipt. Simplified means it still needs to show the retailer's name, the retailer's VAT number, the tax point date, the amount, and if there's any differing VAT rates within the mixed receipt. What it doesn't have to show is your name and your address as a purchaser. Over £250, it should show your name and your address as a purchaser.
Right. So anybody that's doing retail arbitrage, say, for instance, should they keep their receipts below £250?
Yes, keep them below £250. And when you upload the receipt to your bookkeeping software or give them to your accountant, with some retailers, you'll find that all the details are on the front except the VAT number, and that's probably hidden on the back somewhere. So if you're uploading details for him as a record, photograph the front, photograph the back, create it as a PDF and upload it as one receipt. So he's got the VAT number and all the rest of the details on the simplified receipt.
Perfect. So say, for instance, you've decided to take yourself down to the Sainsbury's toy sale and you're going to spend £1,000. Don't put it all through in one transaction. Keep it below the 250. Put it through in 4 transactions.
Yeah, you might as well do if you can. I mean, what you can do with some retailers is if you spend £1,000, you can then go to the customer services desk and ask for a proper VAT invoice, and they have to do that within a certain time frame by law if you request one as a VAT registered company. So you need your till receipt, get to the customer services, they should print you off a proper VAT receipt.
Right. Okay. Now I'm going to quickly ask this as an add-on because I know it will come up, and if it hasn't come up already, what do we do about the retailers that will not give us VAT invoices?
This is what I say to all my clients: do everything you can possibly to have been able to get that receipt. So make sure that you pay through your business account. We can track the money through bank statements. Make sure you can identify the products being sent into Amazon. Make sure we can identify the sales of the products coming out of Amazon. Make sure we're declaring that sale in whatever tax return or VAT return that you're doing. And then once we, and keep if it's like online arbitrage, keep the email confirmation, keep the delivery slip, keep everything you possibly can. Email them to ask for a receipt. Don't just email them once, email them 2 or 3 times. Let's make a paper trail of you asking for that receipt over a long period of time. And if they don't then supply you that receipt, at least we've got an argument to HMRC to say, look, we've done everything we can to get that receipt. It's the retailer that's actually breaking the law, so you need to go and speak to them. Then hopefully, if we put that case forward, they won't discount the VAT and say you can't have it, because you've done what you can. If you just think to yourself, I can't do anything, get the receipt, chuck it in the bin, and then you get found out and HMRC want to investigate you, then it's different. You've got no track record of that product. You've got no track record to chasing them. So just do what you can to chase up the VAT receipt from the retailer.
Perfect. So the moral of that is don't drive yourself mad, but just do what you can, but don't drive yourself to distraction to the point where you want to throw yourself off a building because you can't get your VAT receipts, just as long as you've got that paper trail to prove it, that you've tried.
Exactly. So save every bit of paper digitally, because if we need it and you haven't got it, we can't make it.
Yeah.
But if you've got it and we don't need it, at least you've got it.
Right. Got ya. I'm just going to quickly put up what someone said, that we're not broadcasting in YouTube for some reason. I think I might have seen the reason why. So let me see if I can add the stream. I don't know why it hasn't added, but let's just see if that does anything. Fingers crossed. Guys, if for any reason I press this button and the world ends, I will just put a new one up straight away in Secret Wealth Project. So apologies. I'm just going to press this and hopefully it will save those changes. Fingers crossed. And it will start broadcasting it in YouTube as well. Well, that was easy. I can't believe that worked. And I can't believe the world didn't end.
I don't even know what you did.
I literally pressed the button and I added the YouTube channel, the stream. For some reason, normally it picks up, so I don't understand. So guys, if you, yes, and the notifications come up on my phone that we can watch it on there. Apologies for anyone that wanted to watch it on YouTube, but you should be able to watch it now. Sorry about that. Okay. Perfect. Right, let's go. Where are we? Okay. This is an interesting one and probably will very much depend on individual circumstances. But Chris has asked, can you give a few examples of when it's best to be flat rate versus standard registered VAT? And if you can't, if you could expand on it.
Okay, so sometimes you're better off to be flat rate if the majority of your products are 0% VAT rated, because then at least you can claim back most of your input VAT for some of your purchases that are over £2,000. You can claim them back, so you'd be getting money back from HMRC on a quarterly basis, obviously. It's always, what we do is we tell everybody to register for standard VAT to start off with.
Right.
And after 2 or 3 quarters, we check their percentage. Now, the flat rate percentage for Amazon sellers is 7.5%, and you get a 1% discount for signing up in your first year. You can only sign up to the scheme within your first 12 months. You have to leave over certain figures. There's certain joining criteria and leaving criteria. But what we do is we look at your 3 VAT quarters and we see what your average percentage is. Okay. And if you're around the 7.5, then you can choose to go on the flat rate scheme because it's a lot easier from an accounting point of view. If you're well over the 7.5, we can put you on the 7.5. So some people come in at 9.
Yeah.
Some people come in at 6. Some people come in at 5. So what you got to remember is if you're buying really low and selling really high, then your VAT percentage is going to be higher. But if you're buying high and selling low, so your margins are a lot smaller, your VAT percentage is going to be a lot lower. So it all depends what you buy at, to what you sell at, to the products and the mix of the products that you're selling. So we never recommend anybody signing up for the flat rate scheme straight away.
Mm-hmm.
We recommend sign up to standard. Let's get 3 quarters under your belt. Let's see what your percentage is, and then let's get you signed up. If it's beneficial to go on the flat rate scheme.
Wow, that is a service in itself. To be perfectly honest, to be able to look at the real data. And that's so important with every aspect of running an Amazon business at the end of the day, looking at the raw data, at the real data, looking at it and being able to make that decision. So that's amazing that you do that, Mark. And it's interesting. I never thought about it from that point of view with regards to what's going to suit you better for margins. So actually, as an arbitrage seller where there's lots of margins in place and lots of different buy and sell prices, I would imagine it would be kind of an easier decision for probably like a private label seller who maybe sells 3 of the same item and the prices don't really vary, that type of thing. It's an easier decision to make in that respect.
It's all dependent. It's exactly, I mean, you hear this a lot from accountants, but it's all to individual clients' needs and whatever their matrix of numbers is and whatever their data tells us is how we advise them. We never kind of advise the same people to do the same thing or the same way throughout every aspect of the business because it is an individual need. Yeah. So it's really hard to say go flat rate from the beginning or go standard from the beginning. It's like, so we advise standard from the beginning. Let's have a look at it. Let's run some numbers, and then we can advise whether it's beneficial to go on the flat rate or not. But one thing to bear in mind is there's a thing in accountancy which is gain on flat rate and loss on flat rate. So if you make money being on the flat rate scheme, that still goes into your set of accounts as sundry income, and then you're taxed on it a corporation tax. So it's not like you make money on it. You'll make the bit less the corporation tax, but we still have to declare the gain or the loss. So you tend not to lose out or gain too much. It's just it's easier from an accountancy point of view.
Yeah, because obviously that's kind of, well, not a well-known thing, but obviously as someone who sells services, so say for instance you sold something like coaching and that didn't require any VAT claim back or anything like that. Say for instance you were a coach and you've got people paying you VAT and you're VAT registered. I think a lot of people think you grab that extra 13.5% for yourself or whatever it is, but obviously the government doesn't miss a trick, the HMRC doesn't, and they want their fair share of that as well.
Yeah. And what you remember about the flat rate scheme is it's not 7.5% on your £100, it's 7.5% on your £120. So VAT is 20% on £100 to make it 120, but the flat rate scheme is 7.5% on the £120. So it's on your gross sales, where VAT is 20% is on your net sales. So the 7.5% is actually more than 7.5%.
Wow. Okay. Wow. Yeah, I didn't know that either. So thank you for clarifying that. Definitely. Oh, this is a great question as well, actually, Mark. Rachel's asked, charitable donations. Can you withdraw stock to be given to charity via the business, and is it deductible? No, now we have set up our Amazon business to make money. We can sell on eBay, but there are so many charities having hard times. It'd be nice to help out where possible.
Yes, so any stock that you deem that you want to give away or gift, you can do. Obviously, the expense and the purchase still goes through as an expense and a purchase. And if there was VAT on that, that still gets claimed back. Obviously, you're not declaring the sale, so that's where the benefit of the expense comes through, because you're claiming the expense against other income, which is then reducing taxable profit. So you're not declaring the sale when you gift something because there is no sale. What I say to all my clients is, just get a piece of paper, say, I've gifted you 15 teddy bears on this date to this charity shop, and then just get them to sign it.
Oh, okay.
That's so, if you gifted something and you've not given it away to family for Christmas presents, etc.
Yeah, absolutely. And I think generally the gist that I'm just getting from everything that you're saying so far is just to have that paper trail of everything, be able to prove just that you can go back at some, and to keep it all as well in create the paper trail and keep the paper trail and be able to find it. And it sounds really silly because there is so much paper, especially if we're doing RA and things like that. I literally had something today where we had a lost package and I couldn't find the tracking anywhere. It was a personal package. It wasn't a work one. So obviously that all gets tracked through Amazon, but it was mad. And we spent ages looking for it. So just create that paper trail, doing it in a methodical way, and make sure you know where it is. Do you recommend doing it like month by month, Mark?
Yeah, I was just going to say that, and do it monthly.
Yeah, do it monthly.
And don't do it 19 months after the fact when the accountant's screaming for your paperwork to be done and you're trying to work out what you did in January 19. It's just going to be very painful. So do it month by month, put a few hours aside. We give all our clients access to a Google Drive that we own. We create a tree structure in there for them. They have a receipt structure in there for them and a month structure. We tell them to get the Google Drive app on the phone, navigate to the folder for the month, so they navigate to November or October if they're doing Octobers, and then literally take photographs of them, and it puts them straight in the folder from the photograph. So it's turning a long process into a very quick 10, 15-minute job.
Wow. Okay, so yeah, I mean, you're not here to sell anything tonight anyway, Mark, but from everything that you're saying, it's like, why would you want to do it yourselves, guys? Why would you want to do it yourselves when it's all been kind of laid out perfectly for you? Matt Webley asked me this before we came on tonight. He went, make sure Mark does an office tour to show everyone your office.
Okay. Shall we do that? You want to do that?
Yeah, do you want to do it now? Do you want to do it now quick? Because you've got a really cool office. I've not seen it personally, but Matt's always told me that you've just like got a really cool office.
Okay, so I'm just going to
have a quick tour. Yeah, we can see that.
Tour of the office.
Very, very.
This is where the staff normally sit, but obviously most of them are home working. We've got a few skeleton staff in. Oh, we did a little thing for you. I don't know if you can see that.
Oh, love it.
Up on the screen.
That's amazing. Oh, I'm glad I asked now. And
then here's the other part of the office. Here's Jack helping me tonight.
Hi, Jack.
Hello, guys. Other part of the office. And then we
that's Mark's son, everyone.
It is, yeah. Then we have a bit of a breakout space for the staff.
Wow.
They can play ping pong if they want to. They can come and chill, sit down. Over there, I don't know if you can see, we've got a bit of a putting green for them, so they can sit down over there. We have a bit of a bar where they can all have their dinner.
Come on, guys! You've got to give us hearts for this. You've got to give us hearts and likes for this. This is crazy. It's like you've got your own. It's like a mini Google space.
Well, that's what Jack's trying to build. So, yeah. I'll give that one to Jack. He's trying to build us into a Google. So.
Oh, I love it. That's awesome. Well, thanks for showing us, Mark. By the way, guys, it's not over. I just thought while it was on my mind, I thought I'd ask Mark to do that. God, it makes my office look rubbish. Right, I'm gonna get myself a ping pong table for my office now. I have to. Is it claimable if I do that?
It has to be a benefit that's available to all of your employees equally.
Yeah.
All come in and play on it, then it's okay.
Yeah, everyone is loving the office. Everyone's absolutely loving this. Peter says, does Easy Prep have this? If I said yes, would you believe me? Let's leave that one there. Right, going back to the question. Thanks for that, Mark. Going back to that question, I just wanted to pick up what Janet said. By the way, for anyone that's just joined us as well, I'm going through all the pre-asked question first, but I want to pick up on what Janet said purely because I think that links into what Rachel said as well, to do with the charitable and how do you record damaged stock? So we have the charitable stock that you give away. So if something gets damaged and it's thrown away, is it in the same way as charitable?
Well, you can still give it away if it's damaged. So packaging might be damaged, so you can give it away. That normally happens in your year-end account. So what you do is you'd have your purchases, then you'd have your stock. This is your live stock, which obviously reduces your purchases. And then we have write-off stock, which obviously then increases your purchases again, that reduces your profits. It all kind of gets quite complicated at year-end, but it does get written off separately within your accounts. So, yeah, it gets written off and it gets dealt with, basically. So I don't know how else to explain it.
No, that's absolutely fine.
I can't put frills on written off stock, sorry.
No, that's fine. That's absolutely fine. Yeah, just a lot of people loving The Office. Matt says pool table. Yeah, I completely agree, Andrew. So Andrew said when Matt says he's going to the accountant, now we know what he's up to. Absolutely. Right, let's go back to the questions. Jake's asked, what can we claim for or put against our taxes that many people don't know, i.e. eating out, working from home, other allowances? Can you expand on anything like that?
Yeah, I mean, most of the stuff you can claim is, I'll start off by saying whatever you claim, be fair. Because as long as you can demonstrate you've been fair, then HMRC are going to have trouble challenging it. Okay, so you can claim for eating out, but you can't claim for eating out in your own town type of thing. But if you're going on an RA trip, make sure you go a fair distance, and then you can claim your dinner and you can claim an evening meal.
Right. Okay. What about like a working lunch? If I was out doing RA and I grabbed like a meal deal like Sean Paul Gilbert does from Boots, if I grab that, I know he pays for it by his points, which is probably the sensible thing to do if you can't claim for it. So I can't claim for that.
You can't claim for it if you're kind of in your own postcode sort of thing. So like if you was in, are you in Bournemouth?
Yeah, I live in Bournemouth, but so if I went and did RA in Poole.
In Poole, then you probably ought to claim for your meal if it's a reasonable drive. But like I say, don't go to the most expensive restaurant in Poole. So don't go down to Sandbanks and sit with Harry Redknapp and have something to eat because you just won't get that through the books.
Oh,
but
really?
Getting a sandwich, you'll be able to get a sandwich through if you was going to Poole and you could demonstrate that you was there for the day. So you couldn't really, if you was putting receipts through, if they really wanted to, they could find your movements from where you receipt. So if you've been to Poole for an hour and then you spent the rest of the day putting all your receipts through in Bournemouth, you couldn't really claim for the sandwich in Poole. Yeah. But if you can demonstrate you spent virtually the day in Poole doing RA round everywhere, then you'll be able to put your meal through because it is a working day out of your town. It's not from a health and safety point of view to skip a meal and wait till you get back. So yeah, you'll be able to put that through.
Fair enough. I always remember one of the funniest things when we it must have been after we had our son, and he must have been like 2 or 3 or something like that, or maybe a little bit older, probably a little bit older actually. I think we'd all gone out and we put this lunch through our books and something like that. And our bookkeeper at the time, she was straight as a die, which obviously you need a straight accountant or a bookkeeper. And she said, look, I can put flights through, I can put this through. She said, but I really don't think the HMRC is going to accept the chicken nugget Happy Meal on here. So, because all we do is, like most people, I suppose, when, nightmare, we just put all the receipts up and just like chuck them in kind of thing. So not trying to do anything dodgy, but she was like, yeah, I don't think we're going to get the Happy Meal through. So
your argument there to HMRC could be that you invited a prospect and he brought his son.
Yeah.
What was you going to do? Not feed him?
Okay. Creatively. And that's why people go to you, Mark. Definitely. Right. Okay. Thanks for that. Steve asks, can you offset Eurovap payments against UK liability if the product's bought in the UK?
If you're registered in a EU country and you're registered for VAT in the UK, then all of your purchases go through your UK VAT return. And you only declare your sales through your pan-EU registered VAT countries, unless you purchased goods from them countries.
Okay.
Okay. So all purchased in the UK go through the UK VAT. So it kind of makes you think that HMRC are losing out on VAT because your VAT return to the UK is going to be very low, and you're literally giving your sales contribution to Germany, France, Italy, Spain. But it probably works the opposite way around as well. So people that decided this must have worked out that it kind of balances itself out.
Yeah, they must have done, because that really doesn't make sense, because you could have a field day selling in the German market and offsetting it all against your UK VAT liability.
Yes, all your purchases go against your...
Yeah.
UK.
Oh, sorry, your purchases, yeah.
All your purchases go against your UK VAT return. Obviously, you're then declaring the sales at 19% to Germany. So you don't offset anything against the German VAT.
No. I suppose it would make sense to do it in the country that has the lowest VAT percentage, I suppose.
Well, it all depends what their percentage is and where they're registered.
Yeah.
I mean,
no, absolutely.
one country has 27% VAT, so.
Yeah. Matt Baker's just said we find this lower UK VAT returns, but pay more in Eurovap. So yeah, there is
yeah. So it reduces UK liability, but obviously you're paying out across Europe.
Yeah, so it probably balances out. I mean, obviously I don't want to tonight get into the whole EFN thing and Brexit and everything that, that's a whole nother conversation, obviously. And we don't really know what's happening still 100% with regards to that. Just before we move on, as a business, how are you guys like preparing for that? What are you doing in place? Are you as, as not prepared as the rest of us? I suppose you're in the same position, or?
Yeah, I mean, we know as much as you guys. So, I mean, we're not giving any other information to what's out there on HMRC that other people can look at. Obviously, we have forums where we talk to a lot of other accountants, so we're all trying to work out what's going to happen. I'd just like to add that in the current method of the EFN, that will end in its current form.
Yeah.
But my belief is something will replace it, because all the countries around Europe and the UK will not give up on these revenue streams moving around Europe.
Yeah.
So and Amazon won't give up on these sales channels. So I believe something will replace the EFN, but under what structure and how that's implemented, we're just not quite sure at the minute.
Yeah, I completely agree, Mark. I think there is too much. A lot of the time people talk about, oh, well, what is the UK going to be losing and things like that. But there are a lot of other countries that are going to be technically in a worse position. So no one's going to want to miss out on the third biggest Amazon marketplace in the world. And when I say third, it's only, it closely contests Germany at the end of the day. So people want to sell in this market. It's going to have an impact, but obviously we'll always keep everyone updated with everything that's happening here. But I'm of exactly the same, opinion. I think that there will be something that replaces it. Whether that involves having to individually register in different countries, who knows? We don't know at this stage yet. But Amazon.
Yeah. And on the flip side of that as well, Amazon can't afford to lose the UK sellers feeding into the German public, because that's massive. Like I say, Germany is the second biggest marketplace. They rely quite a lot on the UK market, which is probably about 15% on us to feed Germany. They can't afford that to disappear, so they will be battling all of our little battles higher level with the governments, with the people in charge of making these policies, to then decide what's going to replace EFN.
Yeah, no, absolutely. I am going to go in and answer a few of the questions that are coming in live, actually, and I can pick back up on the other questions in a moment, just because we got some related questions. This isn't obviously a VAT question, an accountancy question, so I'll just quickly clarify it. He's still selling in the EU marketplaces. Should I stop? If so, why? It's personal choice, Terry. At the end of the day, the official date to stop is the 21st of December for actual overall sales, but it's 14th of November that any goods will be transferred back cross-border. So after the 14th of November, which is in a few days' time, don't know exactly, then you will be responsible for removing any goods from the Amazon warehouse for any returns coming back to yourself. Now, while I've got you here and put you on the spot, Mark, am I right in saying that if your goods are being held in a foreign European distribution center, fulfillment center, I couldn't think of the right word, technically you should be registering for VAT in that country?
That's right, yeah. I mean, there is arguments to say that it has to be held and for sale.
Right.
So you could argue that it's not actually for sale within that country. But the minute you see any of your goods live, sellable in an EU country in your EFN, you just need to get a transfer or removal order done and get them out of there straight away.
Well, that ceases from the 14th of November. So from the 14th of November, you will no longer be able to do a cross-border removal order. So for me personally, I think that's good enough reason in itself. Not only added to that, I know a lot of people are of the mind at the moment. I know a lot of people are of the mind that, well, actually, because the competition's going to be reducing so much, I actually don't care if there are some returns come in and Amazon dispose of them, because I'm going to be getting higher margins and higher sales. So I do get that side of the argument as well. But I'm afraid we have to be Switzerland on this one, guys. It's going to have to come down to personal choice and what you're happy doing. So I can't categorically say, yes, cut it off. And I can't categorically say, no, carry on selling, woohoo, to our European friends.
From our point of view as accountants, we don't get involved in those types of decisions in people's businesses either.
No, we don't either. I mean, it's something that I get why the question gets asked, because I see the opportunity for a lot of sellers over the next 4 to 5 weeks. And with the competition reducing, with the euro being so competitive to the pound, it is everything in the favour of the UK seller at the moment, especially to sell in Germany. So I understand why people are asking that question, but it is something we've explained everything we can about it. From then on in, it's going to be up to you guys whether or not you choose to make that decision moving forward.
Yeah.
Okay. Hopefully that's answered that. Alex says he's never authorized Amazon to store goods abroad. Well, no one has, Alex, unfortunately. But what happens is the EFN rule, actually, the EFN rule states that your goods are not stored. But what happens is, Amazon being Amazon, a return accidentally will go back to the countries, the end package origin. It will actually, if you've sold it in Germany and the customer's returned it, it'll go back to a German fulfillment center, and then it should work its way back through to the UK. But there's so many bottlenecks with Amazon. There's so many different things. Often what happens is it just gets lost in the system and it ends up staying in that German marketplace. So none of us have done that. None of us have given that authorization, but it doesn't change the fact that it happens. So that, that's the way we've got to look at it. Let's have a quick look. I'm going to go back and see if any of the questions. I didn't want the chat to get. All right, I've answered that one about the VAT receipt. That's fine. So Katie says, is it acceptable to put all your monthly sales from Amazon as one figure as a journal entry each month, brackets, split into the... Actually, let me put this up here as well. This will be handy. 50 minutes in and I've just figured out I can do that. So is it acceptable to put all the monthly sales? There you go. I'll let you read it. Split into all different categories. So sales, Amazon fees, package, postage, etc., etc.
Yes, completely fine.
Okay, that's it.
Yeah, you can add it all at year end. So if your year end was the 31st of March, you could just do one data entry within your bookkeeping to state 31st of March, these were all the entries on that date. And that would create, obviously, the taxable income, etc., within that period. People only break it down into months, so you can kind of see where you are. So it's from a personal point of view for doing it monthly, so you can have a look and say, well, I've made some money in this month, not made any money in this month, or I'm not making money generally each month. Because if you did it at the end of the year, you might find out that you've got a whole 12 months and you've not made any money by the time you put the figures in. So, and then it's a bit too late to adjust anything. Or, on the other hand, if you've made too much money, and it's after the year end, it's then too late to adjust it to get that profit down. So you might end up paying tax because you haven't tax planned. So you can do it, but I'm not sure why you would.
Okay, cool. Thank you. Right, let me just go question. We've answered that one. I think this was also answered in the pre-asked questions. We might as well put it up. Facebook user, sorry, don't know who you are. How should directors draw money, as a salary or a dividend? I'd imagine that's a very individual question.
It is, yeah. It all comes down to any other income, whether you're doing this full-time, whether you've got another job and it's a part-time as a hobby, whether there's other directors involved, other directors involved, other shareholders involved. So it's exactly down to the individual circumstances, but I'll give you an example. If you've got a typical Amazon limited company, one director, one shareholder, no other income, doing it full time, then the most tax efficient way for this current tax year is to take £732 a month. That is tax-free, national insurance free to both the company and the individual. You still get your old age pension stamp paid at that figure. You have to run an official PAYE scheme at HMRC and report to them monthly. The dividend you can then take is £2,000 tax-free. You can still take dividend up to your tax-free allowance of £12,500. So there's probably about another £4,000 that can be taken tax-free. So effectively, you're up to about £14,500 tax-free with no tax, no national insurance. £8,500 of that, the 732, is reducing profit in the limited company, which means that's reducing corporation tax. So that is the most tax efficient way for a single director, single shareholder, limited company.
Wow. That was like, that was amazing. So what you're essentially saying is, I mean, obviously this is all subject to what's in your bank account and obviously things, cash flow, you know, that type of thing. So the combination of what you've just said there, you may as well take that 14 odd grand and pay it yourself, because you don't have, it's not going to affect anything.
No. Some of the dividend will affect, because you're obviously paying corporation tax on it before the dividend is due. You have to make a profit within your company before you can take dividend.
Right.
You're on ordinary shares. You can do it differently on preference shares, but that's a completely different subject. Your wages of 732, you can declare them and put them through your bookkeeping software and declare it to HMRC normally. You don't physically have to take it from the company. So within that year, you're not losing your allowance within the year. So when the money's there, it then owes it you, then you can take the money.
Right. That's what I was going to ask you next, because obviously a lot of people cash out in Q4. That's when they get their big income coming in. So you could effectively build it up and then take it out at that point if you needed to, if that's when your cash flows improve within your business.
Exactly, yes.
Perfect. Thanks for that, Mark. That was gold nuggets galore, guys. Give us some likes and loves for that one. Definitely. Yeah, everyone loved The Office. Obviously, we've gone past that. Let's have a quick look. This is a good one, actually. When transitioning from sole trader to a limited company, what do you do with the sole trader's unsold stock? Is it possible for the sole trader to sell it to the limited company at, let's say, cost price, so no profit is made on the transaction?
That's exactly what happens. So on the point, when you choose that date from when you're starting your LTD venture from your sole trader activity, you'd run a report in Amazon that would tell you the stock at Amazon on that day. For our clients, that then gets emailed to them as a link, and they go in and they fill out their cost prices. That generates a stock valuation figure at cost.
Mm-hmm.
And then we transfer that over to the limited company from the sole trader.
Perfect.
So that's exactly how it happens, at cost.
Perfect. Okay, so no one loses out there.
No.
Okay, cool. Terry says his MOT is due on his car. Found out today that he needs some new tyres and a couple of other things. Can he claim that against this limited company?
No, not if the car's owned by him. He can't really claim those kind of expenses through the limited company. But what he should be doing is he should be claiming mileage at 45p a mile. And another little golden nugget to add in there: if you have a helper that goes with you on any RA trips, it's an extra 5 pence a mile, so you can claim 50p a mile by having a in your car. So if you take somebody with you that's helping you, 50 pence a mile, claim the 50 pence a mile. The mileage that you're doing within the year should cover all of your motoring expenses personally.
Cool. See, Matt Cromie, if you're watching, I knew you'd come in handy at some point. That extra 5 miles, 5p per mile.
You're coming with me. Come on.
Absolutely. No, you're not staying here. You're coming down Sainsbury's with me. I'm getting me extra 5p. Brilliant. That is amazing. Thanks, Mark. So I was laughing too much at my own joke there. Let's have a quick look. I'm going to put this up for a second only because it's a really long question, but it will literally wipe both of our faces out. I didn't realize it comes up so big. Hi, Natalie. You don't want to be asking me this question, be asking Mark. I choose option 2, self-assessment, and option 4, VAT, when I'm setting up my HMRC self-assessment online. Which tax am I registering for my business? Thanks in advance, Mark. I'm only 16 months, but I did go over the £1,000 limit last year to register and complete self-assessment in January 30th. If you can make any sense of that, then go for it, Mark. Sorry. I'll let you read it.
I'm trying to understand. They need to register for self-assessment if they're going down the sole trader route. Obviously, they've said that they've gone over the £1,000 limit.
Yeah.
So I'm presuming they're not far over that. And that is income, by the way, that £1,000 limit for the trading income allowance. It's not a £1,000 profit. It's a £1,000 income, yeah. Some people get that mixed up and think it's a £1,000 profit.
Actually, I saw that asked the other day in here, actually, and that might have come up in the questions. So thanks for clarifying that. So the £1,000 guys is turnover, not profit.
Exactly, yeah. Because imagine you could turn over £500,000 and spend 499,999, and you've not made £1,000, so you never need to register for that. Or sorry, never need to register for self-assessment or anything. So yeah, it's a £1,000 turnover. Okay. So I think, yeah. So they'd register for sole trader self-assessment. They don't necessarily need to register for VAT.
Okay.
So they could skip that one for now, unless their sales are bouncing around the £7,200 a month mark.
Okay. And that's the calculation, is it? 7,200?
Yeah, it's 85 divided by 12 roughly, isn't it? So if you're consistently doing that, then you should really start looking to register for VAT.
Okay, so this is the $1 million question, because I've always understood it to be that VAT registration is a presumptuous thing, in the sense that if you should never register once you've hit it, you should anticipate when you're going to hit it and make that decision. Is that right? Within a reasonable amount of time.
You get 30 days to register for VAT once you've got over the threshold. There's 2 ways of registering. You can register when you think you're going to go over it. So you might have a large contract coming in that's going to pay a lot of money. That's going to be a high invoice value, so you can then register for VAT knowing that's going to happen. But you can also register for VAT when you've just gone over the threshold.
Right.
Because that could have caught you out.
Mm-hmm.
You know, something could have happened that caught you out where you've gone over that VAT threshold. Now, you shouldn't always do that. It's always best to be prepared. It's always better to know your numbers, etc. But you can register for VAT when you've just gone over.
Okay, cool. Because like we were talking about at the very start of this, if there's one time that people are probably going to get caught out, it's Q4.
Yeah.
Where they're going to bounce around that threshold.
Yeah, we can argue seasonal with HMRC, but you still need to have the conversation with HMRC to say this is seasonal, so I shouldn't really register, and then they give you a letter stating you don't need to register because it is seasonal. But that's very rare in online retail.
Yeah, fair enough. Katie asked something about can they put a Disney trip through as Disney RA research? I don't think you're going to get away with that one. I don't know. Maybe flights?
Well, you know, if you're going to Disney, try and set up some meetings where Disney is with wholesalers, spread them across a few days, and then you can claim a percentage for the one person, like if that was you, Natalie, then you'll be able to claim a percentage for your flight, your accommodation, but you won't be able to claim for the whole holiday for the family and the kids and all the meals, etc. But you could mix business with pleasure within a flight, and like I said right at the beginning, just do it fairly. Be fair on what you're claiming.
No, fair enough. Florida friends, come find me. We'll meet up. Right. Okay. VAT returns. A few questions about that. Hong Kong. Lots of Disney questions. You guys don't think I like Disney, do you? Right. Okay.
Where's that from?
Yeah, I know. I never talk about it. Never
No.
talk about Disney. Never, never, never. Right, this is a good one. How do we account for the various cashback that can be attained through the sites like Complete Savings, Quidco, credit card cashback? That's one that probably catches a lot of people out, and even boosted advantage points. So all of those kind of extra benefits that we enjoy so nicely as Amazon sellers.
Okay, so as our bookkeeping team would do a journal entry within your bookkeeping that would allow if you pay for points, and it effectively goes as sundry income, and then taxed on it as if there's profit.
Okay,
so it's dealt with as sundry income, but if you're using points and you've paid less, then the difference to the value of what you've paid then goes as sundry income because you're using points.
Okay, so the moral of the story is you just got to pay tax on everything.
Yes.
But
also, to add to that, you should only pay the right amount of tax if you tax plan.
No, absolutely. Quick question. What if you've got something like Boots Advantage that have all been earned through arbitrage, but sometimes you don't, what if you don't use those points to resell stuff? So like one thing I would always say, like if I use my Boots Advantage cards to buy nappies for my kids, is that taxable?
It all depends who owns the Advantage card. If your limited company owned it, then you should have that as self-use, and then that would go down as you getting a benefit from the company, and then obviously you do get taxed on it. So it removes it from your books to declare your tax as an expense, which obviously inflates profit, which makes tax go up because it's personal use. But if it's you personally, then if you want to buy something and you've gained the points, then just buy it because the income that you've saved on the points is going through and being declared, and then the benefit of you then buying something personally for yourself is then not being declared. So yeah, I think you'd be quite as well just to go and buy some nappies for the child if you need to.
Yeah.
If you own the card, if you own the account. So like if your cashback account was owned by a limited company and everything in the limited company names, you'd then have to declare it. If it was owned by you personally, then you wouldn't.
No, I mean, all of the cashback sites, the loyalty point schemes and everything like that clearly state within their terms of service and their terms and conditions that they are not to be used for business purposes anyway. So I can't imagine why anyone would take out one in a company name because it would get flagged and they wouldn't be able to gain that benefit anyway. Just a quick, this is a good one actually. This is not a question, it's a statement. John's kindly remind us that there's the Expand Your Business Internationally pan-European FBA program. I think it's a webinar, Amazon webinar on Wednesday the 11th, 1 until 2 p.m. I think the Amazon webinars are pretty good actually, so they're always worth tuning in. So thanks for reminding us of that. I seem to have flipped right down to the bottom of the comments. I'll catch up on these and then we'll go back to the pre-asked questions. I think a few people have answered Jed's question, so let's just have a quick look. Yep, 5p Matt, that's what we're going to call him from now on. Right, let's have a quick look at this one.
Sorry,
That's going to stick with him, definitely. Guys, all of your questions you're asking, you haven't filled out the StreamYard, so we don't know who you are. So from Facebook user, can you loan your limited company from your personal savings account so you can have more cash flow until Amazon sends the disbursements and pay yourself back? That's an interesting question.
You can do, yes. It would simply be introduced into your business as a director's loan, and it would sit in your director's loan account within the limited company. Now, HMRC give guidelines to interest, and they tell you that an interest rate should be charged, and they tell you the figure for the year. I think it's about 2% this year. So you should charge your company interest on the money that you loan them, and then you then have to declare that interest on your personal tax return if it's over a certain figure where you need to declare tax.
Okay.
But yes, you can, yeah.
Perfect. Peter wants to know, does passive tax also cover European VAT or just UK?
We just cover UK VAT. A lot of our clients are pan-EU registered. What we find is we can't deal with pan-EU because you need fiscal representation on the ground within them countries. We aren't big enough to have offices in Germany, Czech Republic, Poland, etc., etc. So we simply can't join the pan-EU program doing VAT returns, etc.
Okay.
But what you can do is you can join the program. You can join up with one of Amazon's providers, which is Avalar, Avast, one of those.
Yeah, I think I know most people saying about Avast. I think they say that, but I know that's the ones I've heard about anyway.
Yeah, so Avalara, Avast, you can join one of those. They'll take care of all your EU VAT submissions and payments and all that data. And then they talk to us and give us information, and we act as your accountants within the UK. Because obviously, you still have compliance obligations within the UK.
Okay, cool. That's fine. Right, Jordan says he still works full time and he's doing well, over 1,000 sales a month. I thought it was profit. Now I'm just going to clarify that. I think the 1,000 is that total?
Total income for a year as well, so it's a tax year.
Yeah. So you may want to double check on that, Jordan. It's not 1,000 per month; it's 1,000 for the year. So you will need to register, and you will probably need to take a little bit of advice. But if he registers for self-assessment, how is that going to affect his tax code if he's still working full time?
It won't affect his tax code on his PAYE job where he's full time, but he would need to complete a self-assessment. And within that self-assessment, he'll have an attachment in there called sole trader. And that's where he declares all his income, his expenses from his sole trader activity. And then the supercomputers of software nowadays just calculate if he's due any tax back or if he has to pay any additional tax and what national insurance is due.
Okay, cool. Denise says, am I right in thinking that you make more money as a non-VAT registered unless your turnover is around 150? Now, this is a little bit of an urban, well, not an urban, I think it's quite generally widely acknowledged that you can't hang around the 85. You got to really smash through it, haven't you?
You have, yeah. I mean, I think you find that a lot of people fear VAT and misunderstand VAT. So when they get there, they kind of want to smash through it anyway. So you get a drive to push because you've gone over the VAT threshold. So where you'd buy 10 or something, you then go out and buy 20 or something, etc. So you literally just increase your sales that way. It is a known fact that, I mean, if you go back to what we were talking about earlier about the flat rate scheme, HMRC will be turning about 7.5% of your gross sales. So you're going to lose 7.5% of your profit to VAT once you're VAT registered, and the way HMRC are working it out, which is about where it is anyway. So you want to push. You want to push, really. I mean, if we build that right up to B&M, the shops B&M, their turnover was a few billion last year, and they made probably 2 point something million profit. Well, that's tiny return, but 2 million is still a lot once they've paid everybody.
Wow.
So the higher your turnover, the lower your profit margin is going to become, but the more profit you'll actually make.
Right.
In a monetary rather than a percentage.
Right. Got you. Wow, that's interesting to know. And it does come down to, and again, why engaging with someone in your services, this is all the stuff that you know that we don't know at the end of the day. That's why, you hire an accountant to be able to do these. Once your business gets to a certain level, actually, that's interesting. When would you say is the optimal time to hire an accountant? Because obviously when you're setting up a business, there's various costs involved and not everyone can afford to pay for it straight away. Is there an optimal time?
I think if you're serious and you're going to go for it, then obviously you want to really get an accountant in place right at the beginning, because they will set if you're going to go for it and set up a limited company, you want to protect your home address. So you want to either do that through a formation company or do it through your accountant, so your home address is protected. You're then setting up your Amazon account correctly right from the beginning, so you won't have to go through the pain and anguish of transferring over from a sole trader to an LTD, which we know can be up to 9 months or 9 days, or whatever you get to deal with. So if you're serious about Amazon as a business, do it right at the beginning. Have that chat with the accountant and do it as a beginning. And I try and say this to people that try not to see your accountant as a cost, but see him as an extra department that's going to save you what he's charging you because of his knowledge and his expertise and him being able to implement things in your business right from the beginning, rather than you getting it wrong in the first year and then you having a bigger tax bill that would have paid for an accountant for the next few years, sort of thing. If you're doing it part-time as a hobby and you're just feeling your fee, just have a chat with an accountant. Get a few tidbits from them. Speak to a few accountants if you want to. You might pick up different tidbits from different accountants. Yeah, and try and implement them within what you're doing. And then, obviously, when you start to grow and you think, yes, I want to do this seriously, then talk to an accountant properly, take them on board, and then get their services. But whatever you do right from day one, get your paperwork in order.
Yeah.
Don't keep everything in carrier bags. Don't leave it floating around the floor of the van. Get it all digital. Get it all in a Google Drive. Start understanding bookkeeping software right from the beginning, because tax is going digital. HMRC are going to make everybody keep all their records digital. So when they do a compliance check, they won't come around to your principal place of business. They'll just say, give me authorization to log into your bookkeeping. I want to check everything. So start and learn that right from the beginning when you're doing small numbers. Because then when you're doing big numbers, you're not trying to juggle a big business and trying to understand the bookkeeping.
Yeah. And it's about establishing those good habits from day one. So it's not a huge shock to the system when it comes, because when you make these big changes in your business, when you go from sole trader to limited company, when you go from non-VAT registered to be VAT registered, there's enough to be going on at that time, let alone having to implement all of these changes. So again, biggest thing for me tonight, establish that paper trail and do it on a monthly basis.
I just got a comment, actually. It says, isn't asking an accountant when to get an accountant like asking a barber if you need a haircut? Probably to some it would be. They'd say, yes, you need one straight away. But I can tell you that I've spoke to probably 4 or 5 people over the last 6 months that I've told they don't need an accountant right yet.
Yeah, absolutely.
And just trying to be honest with their situation, their funds they've got available. I'd rather them turn over the money instead of paying us on a monthly basis. I'd rather them turn that over into their stock to increase their sales. So they turn that over, and then hopefully they'll go away and think that I've given them the correct advice to say they don't need us yet. But if you want any advice, want a chat, send us an email, and that's what we do. So that question there is, it's not, it is, and it isn't. All depends who you're talking to.
Absolutely. Right, where are we? Let's go back to the comments and I'll try and pick it up. Obviously, I've got to be really respectful of Mark's time tonight, so I'm going to try and do speed round and go through them as much as we can. You picked up on it in there, and this relates to Andrew asked this question, but again, I can see a few people are asking this in the thread anyway as well. I know you have your own custom accountancy software at Passive Tax. However, if they're not using you, if not, they're mad, obviously, but if not, QuickBooks Xero, Cashflow, what's the best one? Obviously, it's one that has to be digital.
Okay, so we don't have our own. We use a bookkeeping software which is UK-based called Pandal.
Sorry. Yeah, apologies.
Okay, so it's not our specific bespoke bookkeeping software. It's just a local one called Pandal. It's cheap as chips, and it's lovely to use. Dead straightforward. Does all the things all the other ones do, but it's not got all the complications and the bells and the whistles that you don't need. And it's not been built by Americans, New Zealanders, or Australians. It's built by a British company with an accountancy background. So it's we find it ideal for Amazon sellers.
Yeah, perfect. Okay, that's fine. Is there any preference if not that one?
Preference would be, can I just say not QuickBooks?
Yeah, and say whatever you want, Mark.
So not QuickBooks.
We use Xero. I like it.
Yeah, Xero is better. Xero is better marginally. Cashflow is okay, but not so well known. But it does the same job. QuickBooks is very complicated and becoming very complicated, and it's quite difficult and tedious to navigate to find simple information.
Okay, Cool. Peter was just sort of like said, thank you for answering that. Great answer to his tongue-in-cheek comment about the barber situation.
Okay.
Alexander said, is it allowed for an accountant different unrelated business / income streams under the same company? Any accounting law prohibited from doing that? Or do we need separate limited companies for each? And I suppose that's a really relevant question, because a lot of people in this field, like, obviously we sell on Amazon. I've got different income streams that do relate to Amazon, but they're not selling on Amazon. So that's something you must come across quite a lot.
Yeah, it is. Yeah, and what I normally say to people is, if you've got an income stream that is nothing to do with online retail, and the SIC code, which is the standard identification code, I think that's what it stands for, is completely different to your online retail code, then you wouldn't be pulled into the same type of VAT, registering for VAT immediately. You'd only do that when you start to grow and become a VAT group and introduce things into a VAT group. So it would make sense to keep your knitting business completely different from your Amazon business, because if it was all under one, you would then have to start charging your knitting customers VAT.
Right. Okay.
Whereas completely separate, then you wouldn't.
So say, for instance, you have got aspirations of you're selling on Amazon, you're selling successfully, you want to set up a coaching business, but obviously you're not going to be going over the 85,000 in the first month, unless you're Matt Webley, of course. You're not going to be going over that. But so it makes sense maybe to set up as like another limited company or a sole trader and reset your VAT from that point of view.
Exactly, yeah. You can have as many sole trader accounts as well under your own self-assessment. You just add another section with a different trading as to it, and you declare that separately as a taxable income sort of thing. So yeah, you don't need to lump them all under the same. And like I said before, it wouldn't be from a tax point of view advantageous to put them all together. If you can keep them separate, then keep them separate.
Mm-hmm. Cool. We talked about this before we came on, and I thought this was a brilliant question with Richard, and I really wanted this answered. So I'll summarize it, which he's essentially asked, why do people recommend, or why is it important to have an Amazon specialist accountant as opposed to a standard accountant?
There's no reason why you would need a specialist Amazon accountant. You could go to any high street accountant, but what you'd probably find is you'd pay them to do the work, and at the same time you'd be educating them, because they wouldn't know anything about Amazon. Mm-hmm. So they'd be constantly asking you, what does this mean? What does that mean? So then you're paying to educate that accountant. And also they still might make mistakes, because at the end of the day, you're not an accountant. So where are you going to get your information from to tell the accountant how to deal with that? Now we spend a lot of time going over all reports from Amazon to find out exactly how things are dealt with. So we know how things are dealt with. And like when we take clients on that have had normal high street accountants, we've even had them thank us for taking them on, because they've been a nightmare for them. I'm not just saying that. We've actually had people say, thank you so much for taking these off me, because I haven't had a clue what I was doing. I was completely winging it. And that's fine. And then when we take clients on that have had other accountants, we look at what they've done, and they've done things slightly incorrect. Like, most people in the world of Amazon know that if you see shipping on the left-hand side of a summary statement, that's automatically, you know that's automatically an income. But a normal accountant would see shipping and automatically think, oh, this is an expense.
Right.
Not an expense. So they put it on the wrong side. They'd expense that sales contribution for the shipping, and then also it then gets credited back out in the fees. So then effectively they're allowing for the expense twice rather than nilling out the shipping contribution from Amazon. And that is major, because that not only does that mean you're declaring less profit, but also it's understating your sales and turnover for VAT registration by a big chunk.
So if that person or in that circumstances were to be investigated, then it could be a problem.
Could be a problem, because they should have registered for VAT sooner. because the sales, the shipping contribution, they've not allowed for within the turnover, and also they've expensed it, which has doubled the expense, which is lower the profit. So it's like a double whammy. And most high street accountants don't know this.
Yeah. No. So it's like anything, you're always best going to a specialist if you can. And Amazon in itself is a very specialist way of selling online. It's not like having a website. It's not like selling on it's probably quite similar to some of the other platforms, but Amazon is quite a convoluted system anyway. So at the end of the day, I suppose you could argue that selling on Amazon is a specialist niche within the online selling or online marketing world anyway.
It is, yeah, because you think about the Seller Central platform. They built one platform for sellers all over the world. So you'll see things in there and think, what does this mean? Well, that's only US only, or India only, or Australia only. So it's not relevant to yourself. So you've got to be able to navigate the minefield of reports to get the right information for the UK tax compliancy. And that's what we do, and that's what we know. We know where to find them. We know how to do that. We know how to classify everything. Yeah, we know it. So you don't necessarily need a specialist, going back to the original question. But we also have clients ring me up and say, I've also got some property. Do you do property accounts? And we say, yes, we'll take on your property portfolio for you, but we are not property specialist accountants. It's not our need. If you need proper specialist advice on stamp duty, capital gains, etc., you would then need to pay a third-party specialist property accountant for that information, and they're quite happy with that. Because that's the way. That's the way it's going in most industries. I think people are niching into certain areas, and obviously we're niched into Amazon.
Yeah, absolutely. I completely agree. I think it's the sensible route to go for a lot of people's businesses. That specialism works with everything. As the Americans say, what is it? The riches are in the niches.
Never heard that one, but yeah.
You've never heard that?
Oh, they say niches. I see what you mean.
Yeah, we say niches, but I'd have to put a posh accent off. The riches are in the niches.
Yeah, I get you now.
You get it. Yeah. Right. Right. Just quickly before we move on, that's actually, I think it might have not confused people, but they just sort of said, surely shipping's an expense.
Not if it's on the left-hand side of your summary report. It's a sales contribution. So Amazon, if you're VAT registered, it's quite funny, really. They give you the sales contribution for the shipping, and then they charge you. Obviously, the VAT is then charged with that as income. But then they take the expense off as net and leave you with the VAT to declare as your income. So if it's on the left-hand side of your summary statement, then it is a sales contribution. That is where the end buyer on Amazon have paid for shipping. Right.
Okay. Whew. Lot of information tonight, guys. So hopefully, I think that in itself is, something that not a lot of people were aware of. I know it's a contribution from my point of view, but at the end of the day, I don't do accounts. I'm not an accountant, so this is amazing.
The same. I wouldn't know how to prep anything. If somebody gave me a box of stuff and said, "Get this ready for Amazon," so they'll accept it, I'd just go, "Yeah, I have no idea what you're talking about now."
Yeah, I can't help you with that one either. I don't do any of the prep either.
I can count them and put them in the box for you and tell you how many there is, but I've got no idea what to do with them.
Yeah, no, absolutely. I think this is loads of information. Like Jamie said, this is going to be something I think people are going to go back over and watch, definitely. So there's so much information here. Perfect question, Richard. So thanks for that. I thought it was a really good question. I definitely wanted to bring that one up. Carolyn's asked, are you going to create any type of Amazon course for accountants to use? So standard accountants can learn what they need to do the taxes. I think a few people question that, say, why would you?
No, I'm not. Sorry.
No. Fair enough. Fair enough.
I'll just tell you why, Caroline. We spend a lot of money in-house learning all this, knowing all this, keeping up to date on this. I can't just create a course and give it to somebody for free. Let them go away and learn it the same as we did. Put in the hard work, and then obviously then they can reap that then themselves, can't they?
Yeah, absolutely, absolutely. Nick's asked a lot of questions about, VAT. I'm just going to pick out if there's anything in particular. All things VAT, which VAT schemes we've covered that. What does a VAT registered Amazon seller do? Traditional VAT returns, pay the output. Does a VAT registered Amazon seller do traditional VAT returns, or does Amazon pay the output VAT on our behalf?
If you're VAT registered, then you do what's called a UK VAT 100 return. That's the type of return that you do. Your Amazon fees are reverse charged. We call that a reverse charge mechanism. That means Amazon withhold it and pay it directly to HMRC, but you declare it in the sales and the purchases on your VAT return to tell HMRC to expect the money. So it's a bit of a mix-up of what he said.
Okay. And then following on from that, he's asked, and obviously this is something you probably won't be able to expand on too much because there's obviously lots of reports. He's just sort of said there's a bewildering amount of reports hidden in the Seller Central system. Is there anything in particular? I'm summarizing here. Is there anything in particular that anyone should be looking at? What are the most important reports for bookkeeper and accounting?
Okay, the most important one for people on the EFM program was your daily inventory history.
Okay.
Then view online and check see if you've got any stock in any other EU countries, which means you should register for VAT in that country, and you would be liable for suspension from selling within that jurisdiction. Now, EFN's finishing, so that's not really going to be relevant over the next 3 months. Not sure what's going to replace it, like I've already spoke about. I'm sure there should be something. Other reports are, if you're VAT registered, your AVTR, which is your Amazon VAT transaction report. You can download that as a TXT, have a look at it. Lots and lots of columns, lots and lots of information. You've got to cross-reference all the columns to get to the right information. Yeah. That's basically what we do. We cross-reference that to find out what VAT is due, where and when. And they're probably the two main reports.
Mm-hmm. Okay.
If you're looking for, just one thing to add, if you're looking for your total turnover and you go into the sales dashboard and you look at the figure for the rolling year period, that's just UK. Go and add in your other marketplaces as well. Swap over. And then don't forget those figures you're looking at is in euros, so then it needs to be calculated down. We tend to do that about 0.86%, 0.7% or something, and then just add all that together, and that'll tell you your total income over the rolling period.
Well, I actually think one of the things at the moment that the Amazon Seller app is good for is that. So it's not much use for anything else at the moment. Market keeps crashing. The fees aren't there, and all of these. I'm sure you've seen it in Facebook groups and things like that. But the good thing is it does give you your global sales in the press of a button now, and that really does catch people out, guys, because obviously it's not individual in each country. You got to add it all up, and if you're doing 50 in the UK, 20 in Germany, 10 in France, and 10 in Spain, it's that total of 90. That means you're over the VAT threshold.
Exactly.
Yeah. So keep an eye on that, guys. Make sure you are checking on that global figure on the app. Definitely. How are you for time, Mark?
Couple of minutes and I've probably got a dash.
All right. Okay. Let me just, if it's okay, if I could just try and quickly speed through the ones that were asked pre-hand, because I did promise that we'd get those asked. Sorry. Peter says, we've already answered that one. When VAT registered, what Amazon direct payments go now? I think might be where do they go now? From my calculations, this will be VAT on advertising plus FBA fee plus monthly subscription.
So the fees that Amazon charge him where they're not charging the VAT and he gets reverse charged. Is that what he's asking? So if he's asking that question, yes on what he said, except he needs to be mindful that advertising in the UK.UK is VATable, but all the rest are ES coded. So that would be a European service, and then Amazon withhold that VAT, but they don't withhold the VAT from your UK advertising.
Okay.
So you still need to claim that back.
Right. Okay. Got it. Vindy asked about, is there a figure that takes this thing out of VAT registration? But we kind of already covered that anyway, so I'm not going to repeat that. I don't think there's an actual figure, but this kind of urban legend, it's like plus 150 plus.
Yeah, but that's turnover, so you might lose money. So then it wouldn't be.
No.
It depends what your profit is.
So there is. It's individual. There's no true figure.
There's no true figure. No. Just go for it.
Just smash it, guys.
Yeah.
Nikkei's asked, just registered for VAT in October. What does she need to do to get ready for the first VAT submission payment?
I'm an EQ, was that?
Yeah.
She's a client, so she'd have received emails and instructions on what to do.
Okay.
Basically, start getting your figure together from your stock at VAT registration date.
Mm-hmm.
Because obviously, if you've still got things in stock, we can claim the VAT back on that on your first VAT return.
Mm-hmm.
Start getting in the process of uploading all your receipts into your monthly file. And obviously, if you've not got managed bookkeeping with an accountant, just make sure you're pulling off the correct reports in the format that they ask for them.
Right. Okay. Cool. A couple of I've noticed this in the comments, so I'll kind of just ask a few last questions and try and clear up as many as we can, because that's all of the pre-asked questions. Yeah. Thank you, Mark, for all your time, obviously, on this. This gets asked a lot, I know. How far once you VAT register, how far can you go back in claiming the stuff that you bought beforehand? Is there a period of time? Is it a month, 3 months?
You can go back up to 4 years to claim VAT back, but you must be still holding the stock. So you can't claim VAT back on stock that you've already sold.
Right.
You've declared the sale without VAT and you've declared the profit without VAT. So it's only on stock that you're still holding at point of VAT registration for your stock, and that's up to 4 years. You can go back up to 6 months on services, but that's only for services that aren't spent. So you can't claim VAT back on Amazon fees.
Right.
If that sale has already been conducted and it's been delivered to the client and it's closed and you've been paid for it. But if you paid for some software 2 months ago for a 12-month and they charge you VAT on it, you'll be able to claim the VAT back on 10/12.
Oh, okay.
Because you've not physically spent the subscription yet.
Ah, right. Okay. Where does that work with a course then? Because courses are modular.
Okay, so if you had, is it over a certain period of time? Is it a 12-month course? Is it a 15 module?
No, there's not really. It would be modules. So I suppose it would be something along the lines of, like, for instance, my advanced course was a 6-module course, but people can do it in their own time.
Okay. So they'd be able to claim, if you charge them VAT, they'd be able to claim VAT back if they purchased it just before. And then what they can do is, if they've completed it in a 6-month period and they did it a month before, they could be fair and claim 5/6 of the VAT element.
Right. Okay. So it's, again, the moral of tonight is paperwork, record everything, put it in a place that you can access it. Just be fair, guys. Don't take the mickey when it comes to this, because at the end of the day, and fair will obviously be your own interpretation, but as long as you can prove that you've been fair or you've tried to be fair in any of those circumstances, then you should generally, disclaimer, obviously can't guarantee it, should be okay with the VAT man, with the HMRC.
Yeah.
You know, just be honest at the end of the day as well, obviously. A few of the people just sort of question. One thing I want to ask, Peter said, do you handle eBay? Yes, you do. We covered that as well, so that's fine. There was loads of questions tonight, guys, and obviously Mark is doing this out of the kindness of his heart. So I can't keep can't keep asking questions. So I'm going to have to draw the line somewhere. So thank you so much to everyone that's joined us. Mark, thank you so much for your time. It's really appreciated. And we'd love to have you back anytime. So, please always feel free to drop into Never Mind the Buy Box. And yeah, thank you so much. Just really, really appreciate it. Love the office as well. That was amazing.
I just like to add that what we're offering is a 15-minute free call with me. So if anybody just wants to message me through Facebook, then one of our team will pick that up and then they'll arrange and you can have a 15-minute free chat with me. So if you did have a question tonight that didn't get answered, or you want more clarification on that, or you're looking to become a client, etc., and you want more information on our services, obviously just send us a message through Facebook and then we'll book you in for that call, or one of the team will.
Yeah, amazing. I didn't know if you were still doing those calls, so that's why I didn't bring it up. So thank you for clarifying that, guys. So there we go. Please don't hate on us. If we didn't answer your question, Mark's just offered you a free 15-minute consultation. So drop him a message via Facebook, and can you book it on the site as well, or just message you?
I think they can book it on the site. If they look for Passive Tax on Facebook, then that's got a calendar on it that has slots on it. So there's a certain number of slots we've opened up. So get yourself in there, get one of those slots, and then obviously we can, me and you can have a live Skype and a live chat, and they can ask me the questions then that we haven't answered tonight.
Yeah, virtual game of ping pong.
Yeah, they can do that if they want to as well. I think I'll always do that.
Yeah, it's great. As loads of people say, loads of people giving you loads of love, Mark, and it's great to put a face to a voice. Definitely, it's really great for people to be able to see who you are, and just to hear you talking. Nobody can be in denial about your level of knowledge when it comes to supporting sellers on Amazon. So thank you so much for that. One final thing, again, don't know if you want to say it at this stage, so if not, reach out to Mark. But someone did ask, can I ask charges? What are your charges? I know.
Yeah, I mean, I don't mind saying charges. We do it on a monthly plan. So a sole trader would start at £49 a month, and the limited company would start at £99 a month. They're both plus VAT. And bookkeeping, fully managed bookkeeping, starts from about £28 a month, but that's just for a startup if you're just doing a couple of grand a month in sales and you're just finding your feet with it and want to get us on board right at the beginning. So that's just a brief outline of charges. Perfect,
but it will come down to individual needs and everything like that as well. But reach out to Mark. He's kindly offered for the consultancy call. So thank you so much for that. As I said, loads of love for you tonight, Mark. Thank you so much for joining us. Replay will be available on Facebook. I don't know how much it's going to be available in Never Mind the Buy Box, because obviously I don't know if I didn't tick the box or it didn't work or something like that. But the majority is going to be in there. I know I'll get 5p Matt. He'll have to download this one. He'll have to download this one, and he'll have to upload it into YouTube. So yeah, that's going to stick for a while, that one. Thank you everyone once again. Oh guys, next week we have got, we've got another, if we're not smashing it out the park with people at the moment, we have got someone very special that's going to be joining us next week. So same time next week, 7 o'clock, Tuesday evening. We'll see you there. Mark, it's been a pleasure. Thank you so much.
Yeah, thanks for having me. I'll definitely come back again.
Brilliant. Glad to hear it. Glad we didn't scare you off anyway. Night, everyone. Take care.
Cheers. Bye-bye.